Ruma, can you please tell us the difference between a fixed rate and a variable rate?
Yeah, sure. Okay. Fixed rates, let me give you an analogy. Actually, I normally give it to my clients. Fixed, I consider it like a rock. Fixed rate, which doesn't move, it's like a rock. And variable is like a water bucket. So you can sort of keep putting water in, you can, redraw the money and you can put the money back in. But just to give you an elaborated sort of, explanation on that, let me actually draw it on the board, which is my favorite thing to do. So let's say this is your fixed and this is your variable. So the main difference between fixed and variable is that once a fixed rate is locked, you cannot change. Say for example, your rate is locked today. Today is what, 16th of May 2017. So let's say you've locked it for 3 years. So till 16th of May, so 17, 18, 19, 20, this rate, which you lock in today, let's say 3.69%, it's not going to change. That's a fixed rate, right? Okay, after the 3 years expires, it either goes to a variable, it automatically goes to a variable, maybe a discounted variable, or it could be just a standard variable, depending upon which bank you've gone for and what kind of interest rate you've got, what kind of product you've got. With the variable, and by the way, this doesn't change. If the market moves during this time, this doesn't change at all. The rate will remain as is. With the variable, if you start with today at 3.69%, say 16th of 5/2017, you've sort of settled on a loan, say 3.69% variable. This can change even after the settlement, even a day after the settlement, if the bank chooses to. If the bank changes their rate, the bank you've settled with, this can change, or if the RBA changes the rate, this rate can change as well. It depends upon the market factor, depends on the bank's discretion. So there are few factors you can change it. I mean, the rate can change. Now, the other advantage of a fixed is that if, let's say, the market is going upwards and you've locked it at 3.69, obviously it's a very good situation for you. Like, you're not obviously worried about the market going upwards after the rate is settled. With the variable, that's kind of a bit of a worry. So that's the advantage of a fixed. The disadvantage of fixed is that you cannot make extra repayments into it. If you fixed it, let's say your loan is 1 million on fixed, your normal repayments are, say, 3,000 a month. You cannot make any extra over and above this 3,000 a month. There is actually a limit. I shouldn't say any, but there's a limit. Some banks allow 10,000 a year. Some allow 20,000 a year, so there could be a limit which you can make extra repayments into fixed portion, but you cannot redraw. So redraw is not a possibility in a fixed. On the contrary, in the variable, you can make any unlimited extra repayments without a penalty, and you can redraw as well. So that's the beauty of a variable product, and normally the offset facilities are connected with the variable. There are only 2 banks in the whole industry who give you 100% offset with the fixed. So fixed normally don't give you offset, right? Okay, another very important thing you have to remember with the fixed is that fixed get locked. Locked meaning that the rate can change till the settlement. If, let's say, today you have a pre-approval, it gets locked at the day of the settlement only, unless you pay a rate lock fee. That's very, very important for the fixed. So say for example, you got a pre-approval, say in March 2017, you got a formal approval, say April 2017. So you can only rate lock it at the time of the formal approval. You have to pay a rate lock fee to the bank. Normally it's 0.15% of the fixed portion. You can rate lock it at the day of the formal by paying a fee, but if you don't want to rate lock it, if you don't want to pay any fee, then the rate gets locked at the day of settlement only. Sorry, my hand, I'm just scribbling quickly. So yeah.
Which type of rates are generally higher?
That's a good question. It depends upon the market. These days, variables are higher. In fact, for investment products, interest only, variables are higher than the fixed rates. Normally, in actually good old days, they used to be, fixed rates used to be higher, but now the variables are higher. And also, I think you asked me the other question the other day that what kind of clients would you like to offer fixed and what kind of clients would you like to offer variable, which is a very good question. Fixed, I normally actually suggest to people who want to set and forget. They want to just keep the repayments, set repayments. Let's say if it's your investment property, Jason, and you want to keep the investment property on the side and you want to pay your home loan with the variable extra repayments into the loan. So the investment property is now getting the rental repayment and it's paying off its repayment automatically. So normally those kind of investment properties we suggest, sorry, not advise, but suggest that clients can go for a fixed interest only so that the rental income can pay off the fixed repayment. And variable, if it's your owner occupied property, you want to pay it off quickly, you can make extra repayments into it, and you can sort of clear it off because that's your bad debt. The owner occupied and the investment is so-called good debt. So hence, that's the differentiation between fixed and variable.
Is there a maximum term you can fix a rate?
You can actually. There is in Australia. There's only max is 15 years. Only 1 or 2 banks can offer 15 years. Some banks offer 10 years, but normally as a standard rule, it's 1 to 5 years. 1 year, 2 years, 3 years, 4 years, or 5 years. 4 years is also not very, very popular, but 3, mostly people go for 3 years.
Yep. Thank you.
That's about it.
Yeah.
Thanks.
Thank you.